Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So there was this opinion piece in the Deseret News. It was fascinating. I actually think they copied us. They watched our video from 2 years ago and they copied exact words that Juana used. But the article says, preventing the new feudalism in the housing market. Investors buying up homes threaten to create a society of propertyless serfs unless we make changes now. So Juana, since you were born in Europe and you understand the history of Europe pretty well, feudalism and how did people, what is feudalism, and then how did people own, like what was a serf and why did we have serfs? Okay. What did that mean? Like who owned the land and how did people pay rent?
Okay, so the king owned the land and then he dispersed some of the land out to noblemen who supported him both politically and with people to fight off wars or to go expand his territory. These people that were the noblemen then went ahead and rented out land to people who actually knew how to work the land. So they would either hunt or they would plant crops or in some way work the land. But these people who worked the land did not own the land, they rented it. And periodically the nobleman's administrator would stop by and collect gold, silver, livestock, crops, whatever, as payment for the rent. So that's kind of how it went. So most people did not own the land. Very few people owned it. So it was only the nobility and the king that owned the land, and everybody else worked the land. Basically.
And you weren't actually allowed to own land.
No.
And the people who did all the labor and they were serfs. They were just, right. They couldn't really accumulate anything. They spent everything they had just trying to survive.
Right.
Any extra resources or funds or time they had they were either trying to get food, shelter, or clothing.
Right.
Right? Okay. All right. So you can see that that's an extreme example. Mm-hmm. Like clearly we're not creating people who, like you may be, just because you're a tenant doesn't mean you're a serf. I mean, you'll still, you'll have a good job, you make good money, right? Okay. So let's talk about where what's starting this and what's going on here. We're going to read this thing and then talk about it. The shift started after the Great Recession and has been building steam since that time. As a prelude to the Great Recession, speculative investors began buying up dodgy mortgage securities, and the housing market eventually came tumbling down like a house of cards, with many families losing their homes and investors losing a lot of money. In my opinion, the housing crash was the best thing that ever happened to the real estate market. It was the best thing, because what did it get rid of? The stupid loans.
Yes.
It wiped out speculation. Mm-hmm. It got government more interested in what's going on in housing. Mm-hmm. Prices did fall, making an opportunity for people at the time, because historically prices had literally never been as low as they were in, after the crash. How does that compare to now?
So I just want to take exception to one little thing that you said. You said that it kind of wiped out speculators. Well, it didn't wipe out speculators. It wiped out individual speculators, but not the biggest speculators out there, which are the institutions.
Okay.
But
all right. Okay. The weak point in the scheme were the mortgages. Their value depended on homeowners making their payments, and many defaulted. But what if you eliminated the weak point? What if speculators simply bought the houses and condos outright instead of flipping them, then held on to them? Does this sound familiar? So this is what was happening. Joe would go to his friend who just got his loan license and his other buddy who, Sally, who just got her real estate license. They would say, hey, you can buy 5 houses at this new home subdivision going in, and I'll get you the loan and she'll sell you the house. And then what you'll do is you'll put down some money, we'll get all these loans in your name. The day they close and you own them, we'll just put them on the market and sell them. You make $50,000 on each one. Mm-hmm. Okay, that's what was happening. That sort of fed this thing where doing mortgages became competitive. There were so many mortgages, people were trying to get these special programs to capture more people. Home builders saw this demand. Mm-hmm. They started borrowing money like crazy. And home prices started going up. Mm-hmm. They started building like crazy. And then the banking industry saw this as a whole, and they started saying, hey, look, this is a hot investment. Let's start investing in these notes and the default swaps and all these other things, because this is going to be a huge, thing. And it was all built on this false premise. So this last sentence here, what if they held on to them? Like, what if they didn't flip them? Mm-hmm. If they don't flip them, they don't put them back in the market, and we don't have this problem that we had before, right? So how does that compare to now?
So what's happening now is, rather than these institutions being involved in mortgages or mortgage-backed securities, now they are actually involved in brick and mortar buildings. They are actually buying brick and mortar buildings, right? They're buying houses and they're hanging on to them and they are renting them out. Not only that, but they're going to builders and they're buying entire subdivisions. So they have traded one type of investment for another. The difference is that the previous investment had a lot more volatility in it, and this investment has a lot less volatility, a lot less risk, because certainly a physical structure is something that is needed forever and ever, because we all need somewhere to live, and they have figured that out, and they figured out that they can get good rent for it, and that the more the greater number of properties they own, the more control they have over rent values and over property prices, and it's just a much longer term investment for them. It's a much more lucrative investment for them, and it's a much less riskier investment for them.
Here's my take on this whole thing. Wall Street used to invest in the note. That's how they made their money.
That's right.
They let the home buyers take all the risk of getting a credit score and going through a little work and buying the house. They just wanted the end product because they could go out and buy a bunch of notes, and they could trade the notes and own the note. I think they got tired of that. I think they just said, you know what, forget that. Let's control the whole thing. Let's go out and buy the house. Let's go. Let's own it. Let's put a tenant in it, and then we're just gonna own the whole thing, and we'll just control the whole thing. We don't have to worry about we have to own the note. We're own the property. Like, why would you want to own the note when you can own the property? Because they own the note, but some other investors making all the money from the tenant. Okay, this is a thing that is happening more and more historically in the U.S. The home ownership has been individuals. You bought a house, and then you went down the street and you bought another house and you put a tenant in it. That's like how the market worked. Now, there are people out there who say, no, you don't. The bank owns the house. No, actually, the bank doesn't own the house. If the bank owned the house, when you collect rent, you give it to the bank. Yeah, you say, you give it to the mortgage payment. But no, it's your rent. You get to keep the rent. The bank, you just have a agreement to pay mortgage to the bank. But you do own the house. And I think Wall Street has said, we'd rather own the house. Like, we don't want to own the note. Let's just go own the house. So Wall Street made this turn, and it started with a company, a hedge fund that was basically part of Blackstone, right? And they went out and set their asset management arm out to go buy houses and manage them. And because they said, let's do it. Let's buy the houses and keep them. Okay. Power to raise rents by an average of 23% nationwide in the last year, and up to 40% in some areas. Okay. Now we know what some of these areas are. They're hot markets like Miami, Austin, as well as tack on numerous new fees, some patently extortionate, not to mention the euphemistically called practice of re-tenanting. So, and the power to foist all repairs onto tenants. So let's talk about this one. You're in a market where you have a rent restriction that says you can only raise rent 5% per year, but that means on the existing tenant.
Right.
So you sign a 1-year lease, rents go up 25%. How do you get that tenant to pay 25% if you're not allowed to raise their rent by more than that?
So it depends on where you are and what the limitations are, but you can do other things. You can charge them inspection fees. You can charge them all kinds of fees that basically amount to an increase in rent. So an example would be charging them a fee for inspecting the property quarterly to check the smoke detectors. So you might bill them $100 for that. You might bill them a convenience fee for paying their rent online, and then you might pay them some other kind of administrative fee for paying their rent not online. So all kinds of things that you could do, and I'm not fond of them. And I think that they're disingenuous. I think the rent is the rent, and let's just move on. But so there are ways to do that. The other thing that you can do is you can simply not renew the lease and basically swap. So okay, you live there, swap, and now you're a new tenant in this place, and I can charge you more money, and you're a new tenant in this place, and I can charge you more money. So there are ways that they can get around it. But at the end of the day, the people that it hurts is the people that they were trying to protect.
Okay. So we can either charge a ton of extra fees that we didn't charge, which we've seen. We've seen other property managers do that, and or you can re-tenant. You
Right.
just get a new tenant. Hey, I can't charge you more. You have to move. No, I'll pay more, but I can't. Legally, you can't pay me more. So, or you're just going to move. Landlords have the power to make an immense amount of money without needing to be socially responsible. One renter described her Wall Street landlord as a huge billion-dollar slumlord. Okay, right?
So that happens because tenants want the landlord to make repairs, make improvements, and that sort of thing. And the landlord's position may be, look, we only do things that are required by code. Everything else, too bad, so sad. So let me give you an example. So you might be renting a property that has a refrigerator, washer, and dryer in it, but in your lease it says that these are as a courtesy to you, and if they break, the landlord will not replace them. So that is something that makes tenants unhappy, or depending on what your lease says, and this is pretty common, having your lease say, well, you're responsible for the first $250 or $500 of repairs to a property. So again, that makes tenants unhappy because that's money that they weren't planning on spending.
Approximately 1 in 5 homes is bought by an investment firm. In some areas, it's 1 in 3. Homeownership rates are dropping. In the 1970s, homeownership stood about 63%. Among young adults, it's only 37%, and that's not by choice. Last year, 15% of families looking for a home found they either could not afford a home or there were no homes to buy. In Utah, year-over-year increases in average home prices about 20%.
It's a good bit of money.
Yeah. All right. Investment firms can take these large profits from rents and plow them right back into buying additional housing stock. And they're expanding into buying mobile home parks and college housing. So yes, actually most college housing is actually owned by corporations.
Right.
And these corporations are just buying everything they can get their hands on. Anything that requires mobile home parks tend to be owned by individuals, but they're being purchased now by these companies. Ordinary home buyers don't stand a chance against the money Wall Street investment firms have amassed to instantly pay cash for any property they see with a premium above the current market value tacked on to secure the winning bid. We know this for a fact. We had a listing recently where they just came in at $5,000 over list price, all cash, right? And even if you have more than that, the seller's like, but it's cash, and I don't have to wait for if they're going to get, like, the house is going to appraise or whatever. I can just sell it to them and be done with it. That house isn't going to flip to another person.
No.
That's good. That's a gone house, right? These buyers show up to home sales with a suitcases full of cashier's checks or cash, which is why the price of a home in American Fork, which is in Utah, rose by 6% in a month. Now, this opinion article was written by a newspaper in Salt Lake City, and they're observing what they're seeing happening in their market. Of course, Utah is a very residential state for the most part, a lot of single-family homes. You have a high percentage of home ownership, and that's starting to change. And I think somebody there took note of that, started watching videos on YouTube, found Wanda's video, and co-opted a bunch of things that she's quoted.
So I think one of the things that you're going to see that I haven't seen any data on out there, but I think it's going to start coming out. Probably maybe in a couple of years, somebody's going to start amassing some data. What you're going to see is an older population that is maybe subject to a reverse mortgage, or they will go ahead and sell to these institutions versus getting a reverse mortgage. I think that's probably going to be the next market that these institutions are going to really concentrate on. Because if it was me with a few $1 billion, that's what I would do. Is I would go after anybody who's 70 or over.
Yeah.
And I would say, you know what? I'm going to give you all this. If your house is worth $1 million right now, I'll give you $1.3 million right now for the house. And the only thing you have to do is deed the house to me, and you get to live in it for the rest of your days. And when you pass, the house is mine. And I think that would be something that you will see more and more of, because it makes sense. These deeds due upon death, I think that's what you're going to see, versus these reverse mortgages that people usually in that age group would take out. And that's going to be a huge thing, particularly because not everybody has children that they're going to pass on the house to. So maybe if you don't have anybody that you really want that to to give the house to, or maybe you want to give the cash to your kids now. That might be a way to do it. So then your kids don't have to sell the house down the road or whatever. That's going to be a way to do it. I think that's going to be a huge way for them to acquire these properties, and it's going to be such a quiet way that it's being that they're being acquired, because you're not going to see them, because these deals are going to be done, and they're not going to be anywhere that people can really see them until these houses start turning over to these institutions. So somebody should bookmark this video, because I'd be willing to really bet that this is going to happen within the next 3 to 5 years. You're going to start seeing this.
It is, first of all, it's not a new thing. It's called tenancy for life. Mm-hmm. As long as you're alive, you get to stay in the house for free. There was a famous example of this that happened where this guy who was like a young attorney or something and business person in Paris bought this older woman. She had this beautiful apartment, but she said, the guy said, I love your apartment, I want to buy it. But she said, okay, this is what we'll do. You buy the house, you buy this apartment. I get to live here until I die. But in the deed even says, I own the house, or no, you own the house, but I get tenancy till death. I have tenancy for life. It's backed up by the courts. Can't be evicted. As long as she's alive, she gets to stay in the house. She was like rather far along. Mm-hmm. I think was in her 70s, wasn't she?
Yeah, she was in her 70s.
She was in her 70s. I thought, this guy's thinking she probably doesn't have that much longer. I'm going to get the house at some point. He even paid a relatively, like a cheaper cost for the house to, in effect, to like less than market value, but she get free rent. She get to stay there. I think she like lived over to be over 100, right?
Yes, she did.
She lived over 100 to be over 100. So she's literally, as a matter of fact,
she outlived him.
Yeah, she outlived him.
She outlived him.
And then the heirs had the house, but they were like, she lived in it for free the whole time. Yes. And so if we can find a link, we'll put that link to the article. It's fascinating. There was another one recently that happened somewhere in the Bay Area where they bought her house and she gets to live there until she dies. But then when she dies, the house goes to some other entity, but she gets to live there for free. This tenancy for life is something I think you'll see. It's a great way to acquire houses. Reverse mortgages are a real pain in the butt. So this is a much better thing than doing a reverse mortgage. And I think this is something Wall Street will start doing because it gives the people some cash right now to live, but then they don't have to, they have a place to live in. They can just stay in the house.
Right. Yeah.
Yeah.
So I think it's going to be something interesting to watch because remember, we've got a really large population of people that are 70 and over at this point, and they are staying put. They're not selling their homes. They're in pretty good health. They're living their lives, so they're not selling their homes. But I think they may be looking at younger generations that could use some cash. Maybe they're looking at themselves and thinking that they might live the rest of their lives of their days in maybe a better lifestyle by accessing the money from their house. So there are all kinds of reasons why they might do this, and I think people far smarter than I have thought of this, and I'm sure that if they're not doing it, they're about to do it.
Once Wall Street or big institutions own a substantial number of homes, we can call it, there's going to be a point in which Wall Street owns over 50% of the houses, right? It's going to happen. I don't know when it's going to happen.
So in the comments, give us your guess what year that's going to be.
Okay, the month, just in case we have a tie. What year and month will Wall Street over, and it'll probably be a big deal, right? We'll do a video then. We'll probably be pretty old, but we'll do a video about it.
We won't be that old.
We may not be at the rate things are going, but I foresee a future in which people are saying the housing market's going to crash. Okay, well, I would venture to guess that any time if there was even a home price decline, that Wall Street would step in and say, "Hey, no, we're good. We'll take these houses. Yeah. We're declining home prices. We'll buy that, right? Yeah. We'll take some of that." Where the flips over, and I think it just gets harder and harder. If you ask us, like I had a guy in the comments say, "Well, when's a bad time to buy?" Well, a bad time to buy, okay, you want my answer for the bad time to buy? Any time in the future is a bad time to buy, okay? Good time to buy, any time prior to today was a great time to buy. Any time in the future, horrible time to buy. No, seriously, that's my answer. Because I got, he was like, it's not always a good time to buy. Never said it was always a good time to buy. I'm just telling you in the future is always going to be a bad time to buy. Potentially, it's a bad time. Yeah. Potentially, it's a bad time to buy in the future. I think that other people see this too. I think that Wall Street people see this. I think banks see this. I think there's some people out there maybe watch this video who see this too. That in the future is a bad time to buy, and they're like, I'm just going to buy now.
Right. So remember, these Wall Street firms, they do have access to all these actuary charts, and they do have a pretty good idea of how long people are going to live. So there's going to be a formula by which they go. And they can say, look, this person is this age. We estimate that they're going to live this long. So that means that if the house is worth $1 million today, by the time they die, it's going to be worth $1.5 million. So we split the thing. We'll give them $1.2 million today, which is way over market. They'll take it, and then we're golden, because chances are that by the time they die, the house is worth considerably more, and we didn't have to compete for it, and we're controlling that real estate. It's all good. Right. And that's it. So there are really good reasons to do that. It's the same reasons why they went the trustee sale, and they paid, in our estimation at the time, they overpaid for properties, because they understood that even though they overpaid in that moment, it made sense for the long haul. These companies, remember, are investing this money in real estate for the long haul, and they understand what they're doing. They're far smarter than we are, and they're looking at this huge market, and if they're not, I'd be shocked, at this huge market that is untapped. Nobody's doing this, and they can put systems in place to do this, to do it well, to do it profitably, and it doesn't harm the people that they're buying the properties from. It actually helps them, because they're accessing that cash, they're hopefully having better lives, maybe they're helping other family members, so it's all good.
If you liked the video, share it. Make sure you subscribe, because we have other stuff with really good content that's coming out that you're going to love. Hit the notification bell, leave us a comment. Like Wanda said, tell us when you think that the flippening is going to happen, where half the houses are owned by Wall Street and half owned by people like us, just human beings, and not feudal landlords.
Right.
Right. The nobility, the Wall Street nobility will take over and own everything.
Right. So remember, we need the month and the year when non-humans, meaning institutional investors, will own more than 50% of the residential real estate in the U.S.
And
robots
are included.
I'm sorry?
Robots are included.
Are robots on the human side or on the institutional investor side?
Non-human.
Okay,
They're robots.
Okay, so robots and institutional investors own more than 50%.
Right.
Okay, got it.
Okay.
Month and year, people. Subscribe, hit the notification bell, like the video, and we'll see you on the next video. Bye.
Bye.